Hey guys, Trader Mayne here. In this video, we're going to be creating a tier list for trading indicators. Okay, I'm going to rate them from GOAT to garbage. What is the best? What is the worst? I'll give a quick summary on what each one does. I'll show it to you on the chart, and then I will give it a rating. And by the end, we're going to have a tier list. After that, I want to know, do you agree with my ratings? Do you disagree? Let me know in the comments. And if there's indicators I didn't talk about, let me know. Maybe I'll do them in part 2. So first up, we got the VWAP. Now, this is not to be confused with the Cardi B song about wet ass you-know-what. VWAP stands for volume weighted average price. So VWAP is kind of like a moving average for rich people. So effectively what it shows you is the average price that a asset or security, or in this case Bitcoin, has traded at over a given session, both based on price and volume. So it can actually give you a real sense of positioning. Some people use VWAP as dynamic support and resistance. If you hold the VWAP and trade above it, it's bullish. If you sell off below it, that might be viewed as bearish. I do actually think this is a useful indicator because it's like a moving average. It can tell you what the trend is. It can be used as dynamic support and resistance, and it takes into account both price and volume. That's pretty based. We're gonna put this in the S tier. Off to a hot start. Next up, we got the MACD. MACD stands for McDonald's, because if you use this indicator, that is where you are going to be working. I'm obviously kidding. It stands for moving average, convergence, and divergence. And really what this is it's just a fancy way to show the relationship between two moving averages. This is an indicator that dumb people think smart people would use. At the end of the day, it's just two moving averages, and I think you'd be a lot better off literally plotting two moving averages directly on the chart and using that instead. So MACD is going to get a C, which stands for chicken nuggets, which you're going to be serving up at your next shift at McDonald's. All right, next up we have the Ichimoku Cloud, also known as the Ichimoku Kinko Hio. Now this is an indicator after my heart for my fellow weebs out there, all right? My fellow low time frame otakus. First of all, let's get one thing out of the way. The name, the terms, super cool. Kijun Bounce, the Cloud, Kumo, the Tenkai-sen. I think I'm about to launch a fire style ball jutsu if I keep saying these things out loud. What I really like about this indicator is it offers you a lot of information in one glance. You have support and resistance, you have trend information, you have momentum information, and you even have clues about potential periods of mean reversion. So it's giving you a lot of data in one visual system. That's great. The downsides is it can be a little bit complex to understand, and you need a high-end PC even to open this up on your screen. So with all that being said, Ichimoku gets an A for anime. Next up, we got the Fibonacci retracement tool. Now, this is one that hits close to home for me because back in the day, I was part of the Fibonacci cult. I was drinking the Fibonacci Kool-Aid. I was chugging that stuff out of the jug like my life depended on it. What does the Fibonacci tool really do? It's not even really an indicator. It's simply a measuring tool. You're plotting point A to point B, and you're using this tool as a way to project potential levels of retracements for either a higher low or a higher high, or potentially extensions of a move. Now, the Fibonacci bros will tell you that these are some secret esoteric numbers that exist in nature, the Fibonacci ratios in your ear, in your DNA, and therefore when they draw these lines on the chart, they have some sort of secret knowledge that unlocks the keys to the universe, when in reality, it's not that deep. We're drawing lines on a chart. It can be very useful because the market does move in measured moves to calculate the depth of a retracement, to calculate if this move went from A to B, potentially a standard deviation higher might be a good area to target. That is what the Fibonacci tool is good for, and a lot of it is almost a self-fulfilling prophecy. Now, if you start using fib spirals and crazy extensions on your chart, you might be too far gone to help. This is a good tool to use, and we'll give it a B because it's basically astrology for crypto and trading bros. Next up, we have Elliott Wave. So Elliott Wave is a theory that explains that price moves in these 5 and 3 wave patterns that are predictable. So you have your 5 wave impulse or trend to the upside, and then you have a 3 wave corrective structure, followed by another 5 wave impulse to the upside. And when you start drawing it out, you go, man, this is actually pretty accurate. I mean, look how good this looks. We're nailing each one of these moves. The problem with Elliott Wave, in my opinion, is there's so much subjectivity, because is this the 5 wave? Maybe this was a truncated B, and in here we actually have to have a complex double wombo combo WYX correction. And it just kind of gets confusing because each analyst can view this differently. And in reality, I think a much simpler way to view the market is by using just market structure itself. The market makes higher highs and higher lows, and then eventually that uptrend stops, and instead of being an ABC 3 wave down correction, it's just a pullback. The market is now downtrending, and then guess what? We get a structure break and it's trending up again. So Elliott Wave kind of fits with the Fibonacci bros. It's like, come back from astrology and space and just get back to drawing squiggly lines on the charts with the rest of us. The funniest part of it all is the guy who created this, his last name was Elliot, he died poor. How much can we trust this guy's theory if he died without any money? So if you're using Elliott Wave, you might wave bye-bye to your profits. It's going firmly in the D category, D for dog shit. Next up, we have the RSI, which stands for Relative Strength Index. It's a momentum oscillator that's going to help you determine the strength of recent moves, as well as whether a trend might be getting a little long in the tooth. Is price overbought or oversold? Now, RSI gets a bad name because it's actually probably one of the first indicators you've heard about. You find out about RSI on YouTube or Baby Pips. You go in and you start shorting as soon as things get oversold, and you get blown up. The thing about RSI is if used correctly, it's actually a really good indicator. Using the RSI in combination with key high time frame levels, you can catch things like the top of Bitcoin here, where we had price coming into resistance, getting into the overbought territory, and putting in a bearish divergence, where price was making higher highs and the RSI indicator was making lower highs, showing that momentum was actually waning into a key level and into overbought territory. Remember, it's not about the size of the boat, it's about the motion of the ocean. So RSI in the right hands can actually be a fantastic tool. One thing you do have to be careful of, though, is it's not as simple as buying or selling when things are overbought or oversold. The RSI indicator can remain overbought or oversold a lot longer than you can remain solvent. This is firmly going in the A category. Next up, we have the TD Sequential. Now, guys, this one, it's not even really an indicator. It just counts candles for you. Can you count 1 to 9? Fantastic. You don't need this dog shit indicator. The idea here is that you can use candle counting to determine when a trend is getting exhausted and price might reverse. The problem is it doesn't fucking work. So notice here, we counted 1 all the way to 9, and that's supposed to be when the reversal is. But you actually have another 1, and then the reversal happens. Now there's a second part to this where after you get that 1 through 9 count, you now want to count to 13. And if you actually get to 13 after the 1 through 9, you've now got the sign of a very strong trend reversal happening. Are you getting confused yet? I am. And you can see here we actually got a 1 through 9 and then a 13, but look, price continued up. And shouldn't have this been a strong bearish reversal? How come price continued to trade higher for quite literally days after the perfect 13? If you are using the TD Sequential, I can only assume you failed math at a very young age. This indicator is stupid. How do you even reconcile for different candle counts on different time frames? I don't even know. So I'm putting this one in a new category. I'm skipping over E. We're going straight to F. TD Sequential, F for fucking stupid. All right, last but not least, guys, we have price. Do you see that? Do you hear that? The chart, it's clean. There's no noise. There's just price. This is my favorite way to look at the charts and interpret them. It's just using price itself. There is no complex mathematical equation going on to represent price as a moving average in a histogram. There's no subjectivity of Elliott Wave. Where does this wave start? Where does this one end? It's purely just the candlesticks. The level is the level. This is the monthly close. There's no subjectivity there. That is the monthly close, and it ended up being support. It's clean, it's not noisy, it's objective. So this is my favorite way to analyze the charts because it's not noisy. I have a bit of OCD. This allows me to keep my charts uncluttered. It's objective because there is no decision about where a move might start. Did I pick the right level? Am I using the right moving average settings? Am I choosing the right session to base my VWAP on? It's quite simply the time frame you're on. You get all of the data there, the open, the high, the low, and the close. And in my opinion, that's all the information that you need to make your decision. So if you're like me, you want something that's clean and straightforward, that doesn't require you to guess. You should use just price. So nothing complicated, nothing confusing, just pure and simple price action. So for the obvious reason that this is the best way to look at the charts, this is going firmly in the S tier for supercalifragilistic expialidocious, the #1 best indicator, tying VWAP, which is kind of a surprise addition. Even though it's not something I actively use, I do think it's a good indicator. But this is my tier list. We have VWAP and price action in the S tier, Ichimoku and RSI in the A tier. We have the Fib retracement in the B tier. We have the MACD indicator in the C tier, Elliott Wave in D tier, and all the way down in the basement in F is TD Sequential. Get yourself some help if you're using the TD Sequential. But that's my tier list. What do you guys think? Do you agree with me? Do you disagree? Are there other indicators you'd like me to review? Let me know in the comments below. I'll see you guys in the next video. Bye.